Hello, welcome to my YouTube channel. I am Imane Khan. I want to reveal to you 7 ways to master your emotions in trading. These 7 ways will blow your mind. I mean, they are everything they are concise and precise. They are about everything you need to put your emotions in control and in check. Remember, 90% of your trading success depends on your psychology, your trading psychology. 90%. If you will be successful in trading, 90% of that depends on how healthy your trading psychology is. And 10% is just your strategy. No big deal about strategy, really. So I'll take you to the right and reveal those 7 things to you. I am Imane Khan again. Welcome to my YouTube channel. I share content around Forex trading, cryptocurrency, how to earn in dollars online, and everything that has to do with wealth building ideas and opportunities. So if you like such content, do well to hit on the subscribe button and then hit on the notification bell icon so that when I upload new videos, you will be notified. For all my returning subscribers, cheers and thumbs up to you guys. All right, without further ado, this is the part 4 in the trading psychology series. We want to consider 7 ways to master your emotions. These are the 7 ways that help me to master my emotions. These are the 7 ways that help me to put my emotions in check and then help me to become much more profitable than I was when I started trading. So don't miss any single one of them. Make sure you stick with me till the end of this video to get the full story and the full gist. And then I trust God and I believe that after this video, you will become a master of your emotions. All right. All right. Number one way to master your emotions is to backtest your strategy. I can't say this enough. Don't just jump on any strategy. For example, I am the lead trader of and the curator, the producer, the owner of the TMC Trend Mastery course strategy. All right. Now, if you are getting that course, even as powerful as that course is, with about 70% win rate, don't jump on that course and then start running. Take the course and do a back test first of all. If you are disciplined enough, try that backtesting for over 100 trades and see how it plays out. See how it turned out. That's what we call backtesting. Take the strategy and go over past and previous trade and see how the strategy plays out. That will help you to build your confidence further in the trading strategy that you have decided to use, be it TMC or be it any other strategy at all. This is very paramount. Number two thing to do, the second thing to do to keep your emotions in check and in control is to always set your stop loss and your take profit and walk away from your charts. Walk away from your chart. Don't be found babysitting your charts. Do not be the boy, the girl, the man, or the woman who takes a trade and then he's on the screen and he's looking. Ah, oh, let him move now. Oh, it's going now. Okay, it's going now. Oh, no, don't do that. You will drive yourself crazy. You will drive yourself crazy, really. That is a very bad habit. When you take your trade, set your parameters and then walk away. If you are trading on a 1 hour time frame, it means that every 1 hour you have the chance to check your chart. If you're trading on 4 hours, then return to your chart after 4 hours to check how the trade has done or is doing. If you keep babysitting your chart, you are messing up with your emotions and you are training yourself very badly. Is in a bad light. That is, you can never become a master of your emotions babysitting your chart. That's a no-no. It's a no-go area. Don't dare that. The temptations are there, but make sure you win over that temptation and keep your stop loss, keep your TP where they ought to be, and walk away from your phone, walk away from your laptop until the time comes to check your trade. That's number two. Number three, haven't gotten your strategy that you wish to trade with, start trading conservatively. Grow bits by bits. Okay, don't get a new strategy even if it's TMC and then the first day you decided to trade live, you have $100 in your account or $200 and then you are trading with the whole of your margin, your free margin. That's wrong. You're exposing the whole $100 because you heard that TMC is a killer strategy. It has 70% win rate. Brother, that's wrong. No matter the strategy you are trading with, start small, start conservatively. All right, the market is not running. The market is going nowhere. There will always be opportunities for you to trade in the market. The market will always be there for you. So there's zero need for you to start and expose the whole of your capital just because you heard that the strategy is good and fine. That's a no-go area. So please start small. Start with the lowest and the minimum lot size, and then with the minimum trading positions. Open one position for a start. Open a position that you are able to control, such that if you lose that trade, you will not run mad. Start like that. Start like that. The number four point, the fourth thing that you need to know and you need to do to master your emotions is to be ready to miss good trades, even if it's by 1 pip or by 1 point. If they don't touch your TP, be ready about that. Be ready for that. Now, because sometimes you set TP and then your trade will just go and then go close to the TP, away from the TP with just 1 point or 1 pip, and then we just reverse. Be ready for that. Are you sure you want to be an emotionless trader? Okay, you want to be a rule-based trader, then that is the way to go. Even if it hasn't hit your TP or it's just remaining 1 point, 1 pip for you to hit your TP, don't touch it. Allow the trade to play out 100% completely and own the responsibility. Now, the downside to this is that while you are mastering your emotions, while you are becoming more in control of your emotions, you may miss some trades. Some trades may almost hit your TP, and with just one pip or just 1 point, they will reverse, and sometimes they even reverse to hit your stop loss. Don't panic. You are training yourself to be a master over your emotions. Always note that there will always be another opportunity in the market. Most times why we panic and why we are afraid when we take trade is because we have over leveraged our accounts. That's one of the things that makes us panic and are fearful in trades. Otherwise, why should you close the trade? Why should you be panicking when it hasn't gotten to its final destination? So make sure you take note of that. Allow your trade run till they get to their destination, which is their TP or their stop loss, whichever one comes first. All right, it's part of the disciplines that you need if you must be a profitable trader and a master over the emotions. So there's no adjusting of trades. Tell yourself, I will not adjust any trades. Once I have set the parameters, I am not touching that trade. I'm not adjusting it. Okay, the fifth thing you need to know is always wait for price to come to your point of interest before you take a trade. Always wait for price to come to your area of interest, your zone, whichever zone you have decided to trade off from. Always wait for price to come into that zone before you pull the trigger. Now, sometimes price might end up coming to that zone, coming very close to that zone, maybe with a pip as well, a pip away from that zone, and then you just reverse. See, just tell yourself that trade wasn't my trade. My trade is any trade that comes into my point of interest. We call it POI. That is my trade. I'll then look out for my confirmation signals. If it doesn't come into my POI, if it just comes close to the POI with 1 pip difference, it's not my trade. Stick to that. You are training yourself to become a master of your emotions. Nobody said it will be easy. It won't come easy. Just think about picking up a new habit, for example, or you want to become an athlete, you want to start running 100 meters, and you hope to represent the nation, the federation in an international competition. Brother, it won't come easy, it won't come cheap. You have to go through rigorous trainings. There are days you'll be panting, gasping for air as though you want to die and all that. You still will not die. You are just undergoing discipline. You are just undergoing training. You are training yourself for the kind of results you wish to see in your life. Okay, that's the fifth thing you need to do. Number 6, always predetermine your risk amount before you enter a trade. If you have $100 capital, tell yourself, I'm going to get out of this trade when I lose a minimum of $10 or $5, as the case may be. Don't overshoot your risk. So if you have, say, $500 for example, or $200, and you have told yourself that if I lose $20 on this trade, that's when I'll walk away. If you haven't lost $20 on that trade yet, you have no business walking away from that trade. Stay there, stick to the trade, wait it out until you either lose that $20 or you gain whatever amount it is that you're going to gain from that trade. Okay, predetermine your risk amount. If you do that, you will be more at ease, more at home when the trade is playing out. Trades sometimes don't just play out from the moment you enter the trade, boo, and they just go straight line graph, oh, boom, to your TP. No, it's not a straight line graph. It's not a roller coaster ride. Sometimes there are bumps on the way. It goes up, comes down, corrects, impulsive movement, correction, impulsive movement, correction. That's how the market goes. It flows in waves. So you must be ready to wait it out. And to help you do that, decide the amount you're willing to risk on that trade. For example, in TMC, we trade with $10 or $20 as the case may be, sometimes $30 minimum. And the rule is that you are ready to lose that account, that whole capital, that $30 or $10 or $20. You are ready to lose it in an attempt to make 10 times that amount. So if you lose that trade, I see no reason why you should be angry or feel bad. You had already predetermined how much you want to risk on that trade. I hope this is very clear. So please make sure you tell yourself how much you are willing to risk on a trade before you ever open the trade. If you do this, you will be mastering your emotions and keeping it in check any single time. Trading is not the end goal, it's just a means, a vehicle to the end. The end is actually wealth building and financial freedom. Trading is just a tool, okay, a means, a medium to get to the end. So the seventh thing you want to tell yourself to keep your emotions in control is to tell yourself, hey, trading is not the end goal. Trading is just a means for me to meet or reach the end goal. That means you will have to set your trading goals. Why are you trading in the first place? Is it to eat dinner, to have money for breakfast, to have money for lunch, to have money to buy petty things, wristwatches, clothes, and stuff like that, to have money to solve data, to solve the net, or you have a bigger picture to raise funds for a bigger project, or you have a bigger picture to grow your account, to have a capital of about $50,000 personal money where you are trading from and all that. Decide what your goal is. All right. From the ab initio, decide what your trading your trading goal is. Once you know that goal, you will now be trading along with that goal in mind, and this will help keep you focused and help keep your emotions in check. I hope this has helped you. I hope you've learned a thing or two from this series, part 4 of the trading psychology series. Till I come your way again next time, I'm Emmanuel Khan. Please remember to like this video, share this video most importantly, so that other people will see it and like it, so that YouTube can recommend it to other people who may need it as well. Remember to subscribe to the channel and then hit on the notification bell icon, so that when I upload new videos, you will be notified immediately. Like I always say, don't forget, remember, Jesus is the Christ. Ciao for now.